everyone, I'm Ricardo Teran, your title Sherpa and co-founder of Folio Title. Welcome back to our real estate closing course. Today's video is all about settlement statements. These are essential financial documents that are part of the closing of a real estate transaction. We will also break down how to calculate cash to close. If you've ever felt overwhelmed by these forms, don't worry. I'll walk you through them step by step. So, what exactly is a settlement statement? A settlement statement is a document that outlines all the financial details of a property purchase or sale. Things like the sale price, title insurance costs, loan information, property taxes, prepaid expenses, proration adjustments, and agent commissions. In case you're wondering what a proration is, a proration is done on certain expenses such as property taxes or association assessments, where the seller is responsible for a portion of the amount and perhaps has already prepaid the full amount, and the buyer will be responsible for the difference and may need to reimburse the seller for part of the total amount if prepaid. Now, the purchase and sale contract will usually dictate how prorations are handled. A common point of confusion is a proration of property taxes. Since property taxes are billed annually in November, sellers must reimburse buyers for any unpaid portion of the year. We calculate this by finding the daily tax rate and multiplying it by the seller's ownership period. In closings that occur before the tax bill has been published, an estimate of the taxes is used as directed by the purchase and sale contract. Now, let's talk about the three main types of settlement statements you'll probably encounter. First is the closing disclosure. This document is federally mandated for most residential transactions with commercial mortgage lenders. It details loan terms, monthly payments, closing costs, and cash to close. Next is the ALTA Settlement Statement, which is sometimes incorrectly referred to by the parties as the HUD. This settlement statement is used by closing agents in almost every transaction, whether it's a cash deal or a loan. It breaks down all the buyer and seller expenses in a clear, itemized format. Now, the HUD-1 statement used to be a standard settlement statement format, but today it's mostly used for reversed mortgages or certain specialized transactions. More seasoned real estate professionals continue referring to the HUD, even though most transactions today use the ALTA format. Now, let's take a deep dive into the closing disclosure. You can see on the first page, it lays out the loan terms, including the interest rate, the monthly payment, which is broken down into principal, interest, insurance, and taxes, and the projected cash to close, which I'll teach you how to calculate in just a second. In most residential mortgage loans, federal law requires a CD to be provided to the buyer at least 3 days before closing, allowing time for review and any necessary corrections. Now let's compare with the ALTA settlement statement, which shows all expenses side by side, the buyer on one column, the seller on the other, using a system of debits and credits. For example, the seller's mortgage payoff appears to be a debit to the seller, the buyer's deposit is a credit to the buyer. The final balance of what the buyer needs to bring to closing is the buyer's cash to close, which is calculated as follows: the purchase price minus the deposit, minus the loan amount, minus any credits, plus the closing costs. Notice how each line in the ALTA is clearly laid out for both buyers and sellers. Now, who prepares these statements? Well, title companies like ours collect the expenses and invoices throughout the transaction, and we ensure that all these costs are correctly itemized. Mortgage brokers and lenders provide the loan figures. We go through a process called balancing with the lender so that the lender and the title company have the same figures. It's imperative that real estate agents review these statements with their clients and ensure that any negotiations between buyers and sellers during the transaction that financially impact the transaction are clearly reflected. Agents also must ensure their commissions are accurately reflected. Clients are encouraged to review these statements closely and ask questions so that they are clear and satisfied. Buyers will then send a wire transfer for the final cash to close after verifying the amounts. Now, understanding these settlement statements isn't just about avoiding mistakes, it's about building trust. Clients rely on us, real estate agents, lenders, and title companies, for transparency and for a stress free closing experience. When clients feel confident in their closing process, they're more likely to refer business our way. So in the final video, we'll show you how Folio can help real estate agents, mortgage brokers, buyers, sellers, and investors navigate closing costs, estimate expected expenses, and ensure on-time and stress-free closings.